Okay, so we're going to talk about venture and angel investing in Mexico and Latin America. And although I'm the moderator, I'm come here as much to learn as anything else. And so I'm interested in the answers from the panelists as well.
We're all learning.
Yeah. So exactly. Yeah. And so what I thought I'd do is just start out. You know, I've some prepared questions, but I thought I'd just start out by just having each of you just describe who you are, the nature of your fund, you know, the fund size, and just what types of companies you like to invest in. Because, you know, angel and VC can mean a whole lot of different things. And so I think it would be helpful for the audience just to get a feel for, you know, what your current strategy is.
Sure. Well, my name is Christian Meade. I belong to Angel Ventures Mexico. We started in 2008 operating angel investment networks throughout Mexico. As of today, we are present in 4 regions: Mexico City, Puebla, Sonora, and San Luis Potosí. We have we just launched a co-investment fund. It's a seed capital early stage VC fund, and we basically consider every industry but those that require a lot of capitalization, such as real estate, or are capital intensive, such as mining. And well, the nature of this fund, as I said, is a co-investment fund, and the objective is to invest together with angel investors in order to take advantage of their strategic value.
Hi, Rogelio de los Santos from Alta Ventures. I am a serial entrepreneur, and after having some exits in late 2007, a friend of mine said, Roger, instead of launching another company, why don't you replicate yourself? And I started working on the idea of building a venture fund. And as many of the other initiatives I've had, if I had known what it will take, maybe I would have done it. But now, 4 years after that, I'm very proud to say that we have a $70 million fund that is primarily funded by Mexican families, and 30 families, 27 from Monterrey, 26 from Monterrey, 1 from Guadalajara, very proud to have them, 3 from the US, and 3 institutional investors. And we have been doing, the sweet spot is deals that require between $1 and $3 million on the downstroke, and we can save up to $7 million. That is 10% our limit allocation per deal. And on the outskirts, 20% are for a couple of early growth deals, and up to 10% of the fund we can invest it into seed stage companies between $250,000 and $500,000. And we're pretty much investing in innovation around the world. We're allowed to invest outside of Mexico, but primarily if they have an influence and an impact into the Mexican economy and through Mexico into Latin America. Thank you for the invitation.
Hi, my name is Cesar again, and I started 12 years ago as a tech entrepreneur. Through the years, I felt lonely, so 5 years ago, I decided to put a lot of time into building communities of entrepreneurs and hackers, running events, and I started meeting a lot of people, and all of them were starting very interesting things. Nobody was getting funded. So out of that frustration, a couple of friends and I started Mexican VC, which at the time was probably the only ones writing checks below $50,000 as an initiative. And so we did some deals last year, and this year in the summer, we merged with 500 startups. And now we are managing the regional fund for Mexico and Latin America. So we basically invest really early in the deals, companies that have a very solid team, an early product, some customers of users, and our initial check is usually $25K, and we can invest up to to 100K on those deals as follow-on in follow-on rounds. We only invest in the internet-powered businesses, by the way.
Hi, my name is Sergio Romo. I am a lawyer turned into a VC. So the way I started pretty quickly was that where I worked at, I used to do a lot of securitizations. I participated in the legal process of raising funds through pension funds, Afores, which is called Secades in Mexico. So I really liked it, and when I was younger, I was really dreaming of, I can do that. I want to try. So
could it be?
Yeah. So it looked pretty easy doing it through the stock exchange. So I thought it would be easy. It's not, but it's more exciting than I thought. So that's how I co-founded InvestoMex with my partner Jonathan Levy, who is around there. And our it's a venture capital fund for tech startups, basically. And our sweet spot is between 100K to 200K, or participating in rounds no bigger than 500K.
Okay. And why don't I just continue with you then? So what are you seeing in terms of just the environment right now for angel venture capital in Latin America and Mexico?
Honestly, I really think we are still immature. We are working hard on that. The way I see it is, I think our biggest flaw so far is we are not co-investing. I mean, Angel Ventures is great that they just launched their fund. I hadn't personally met Christian here, but I've been working or trying to work with Hernan, who is his partner. And I really think our biggest flaw is the lack of co-investment, the syndicated investment. So on the other hand, angels, there are many people that are being angels that don't know that are business angels, maybe. So there's recently the talk from the person that is in charge of the FOMIN. He was telling that there's still a lot of education, business angel educations to be made. So we're really working on that, but I think we're trying to get there.
Cesar, what are you seeing?
So I'm enthusiastic about what I'm seeing. I'm seeing growth in this sense. I think it's a different problem on the angel side than on the fund side. From the angel side, I think we have a systemic problem where, because some countries such as Mexico did not have a big generation of entrepreneurs some years ago, then it's difficult to get angels right now. And I think what some funds are doing, especially seed funds and accelerators, is that we are filling that gap. We are working at that level with the entrepreneurs, giving a lot of mentorship and creating systems for them to grow. We're creating networks, we're giving access to larger corporations, et cetera. And so there I'm enthusiastic about what's happening in the seed stage. However, of course, those companies will graduate into more mature companies. And there is where I think we need to work at the Series A level. It's challenging I'm not sure if with the funds that we have right now, we'll cope with the demand for money during the next few years. But I'm not that worried, because I feel like they will be created, and the ones that exist will become stronger.
I suppose you are upstream in terms
Yes, I'm upstream in this, but my experience is totally different. Not so long ago, I was at one of the celebrations of IBM 100th anniversary, and I heard from one of the partners of a very big fund that in China there were close to 8,000 funds operating. So we're not there yet. Okay.
Thankfully.
Thankfully, really. But the startup ecosystem and the innovation ecosystems are heating up very fast, and this paired with the trend that Mexico has that is becoming the hotspot, and everyone is becoming very bullish on the country. I think that will attract the many investors and opportunities. Now, the challenge is if the entrepreneurs are ready or not to capture all of that energy. In my opinion, we started investing last year in February. We have made, we will be finishing 12 investments by next month. And in all but one, I have co-investors. And most of them are most of the families that are part of my LP base. So right now, see Mexico as how, at the stage when venture capital was starting in the US, venture capital was started by the Phipps and the Rockefellers and all of those guys. No? So right now, bringing all of those families that don't have either the institutional arm or the family offices or visibility to access the networks of innovators and researchers, I think that's where the opportunity lies. And there's a lot of capital. Sadly, sometimes it's invested into assets that are totally different, mostly real estate. But there's huge amount of capital that, if deployed correctly, could render yields in many industries that sometimes you would never know, that are capital intensive, but that they can generate venture type returns in these type of markets.
Well, building on what you just said, according to what Lorenza Martinez said a few presentations back, she mentioned that today there are 10 venture capital funds identified and around 5 seed capital funds nurturing or already operating in Mexico. I think that the industry is definitely going to grow. The government, someone said, has a role to play. And the government has created these two fund of funds, one focused on venture capital, Mexico Ventures, and the other focused on seed capital, Capital Semilla NAFIN fund. So I believe and I agree that this industry has a big room to grow in. As per angel investment, well, I belong to an angel network. It's very interesting to see that angel investment has developed differently as compared to the US. In the US, angel investors are those guys that were already entrepreneurs that are retired, that had a success, and that want to stay in business, or retirees that want to do this, want to get in business as well in their respective industries of expertise. Here in Mexico, the angel networks that we identify are actually managed. They are not individual efforts. At least I'm referring to those angel networks that formally operate as a group, and these are run by young people. Someone was saying that entrepreneurs, most of them have graduate degrees. More than 50% of the analysis conducted by Alberto Saracho from Fundación IDEA. And I think the same thing is happening with those people operating angel investment networks. So I think that's a good sign. There is a good vibe from young people that are trying to create this industry in Mexico.
So it's interesting because in California, where I invest, 5-6 years ago, there was a huge gap in the market. You know, you could have driven a semi-truck between the gap between angels and VCs. And now I would argue that it's arguably oversupplied, that there's too many super angel, micro fund kind of players. Where are you guys seeing the white space, though, in Mexico? I mean, I'm sure that Mexico's a wide open opportunity, but where are you seeing the biggest mismatches between awesome entrepreneurs and a lack of availability of capital where you think you can go in and make a real difference?
I think that touching on Christian's points, Mexico started in 2004, 2005 with the Mexican Fund of Funds. And by investing $400 million of the Mexican government monies from 3 different secretaries, that yielded around between $4 and $5 billion, with 40 groups investing into the country. Right now, with the creation of these 2 other fund of funds, those will start to be deployed and will generate new groups to be investing locally. Now, with the change that we just had in 2 aspects. First, on the pension funds investing into the asset class, that happened for the U.S. in '78, and the amount of resources, like it was 14x available, and that's when a lot of these companies were created in Silicon Valley. This just happened in 2010 for Mexico, 2009, both for pension funds and for insurance companies. So now there are funds outside of the country trying to raise money here, with the challenge that right now they can only invest in Mexico, but by the mid next year, they will be allowed to invest outside. Now, having said this, I think that the early stage, that we don't call it venture capital here, or the translation in early before was capital de riesgo, risk capital. We now call it, all that stage, we call it entrepreneur capital, because we're not focusing on ourselves, but more on the entity and the value that is created by the entrepreneur himself. And all of that is being structured. And I would say that 10 and 5 funds, maybe they're 20 and 10 groups, and some of them are actively fundraising to operate locally or from abroad, because they want to draw talent from Latin America, including Mexico, into other spaces like places like Silicon Valley. So I see that there is a very good connection between the efforts of connecting the pre-seed, seed, and the venture and early growth stage funds, but the market's so big. We have $1 trillion economy, 110 million people, that 10 funds is not enough. I mean, Utah has is managing more money in a 3 million people state, where we have 110 and a very big market, and very close to the US. So there's room for a lot of investors to come and join.
From my perspective, is that there's not a problem with the lack of money right now in any of the stages. However, I think that we have 2 problems. One is diversity, and the other one is expectation of the funds. From the diversity side, I think that we have options, but there are too few, or at least entrepreneurs do not have a lot of options. So it's more difficult to go and raise money when you are only talking to 3 people. And you cannot pick your investors and say, like, hey, I'm picking this fund because they have a lot of functional expertise into this area, so that's why I'm picking them. It's still funds picking entrepreneurs, and I think that's fundamentally wrong. On the other side, what I'm seeing is that there's still few funds that are betting on the long run, and that has to do with whatever LPs are looking at. Most of us get a lot of pressure from Mexican LPs to create returns really fast. So it's difficult as a fund manager to create a structure where you can invest in entrepreneurs and expect an exit like 5, 8 years later. All of them are like, we want to see money in year 2. We want to see money in year 2. So at least we are trying to hold that pressure. But still, for the entrepreneurs, it's difficult to get money on the right terms, to grow, get big. We cannot keep telling them, get big, when it's like, well, get big, but get big and fast, like in 2 years, because otherwise my LPs are going to kill me.
Yeah. And it's not like the entrepreneur saying, oh, gee, wow, you want me to grow?
Yeah.
Okay, thanks for
okay,
that.
I'll do it. I'll do it this year.
Value-added
right?
advice there, yeah. Sergio, do you have anything to add to the just opportunities that you see or gaps in the venture environment?
From the investor's point of view, I think, I mean, the opportunity is there, is really here, and that's why we are all here, right? So there's no doubt about it. I think there's no lack of capital. I agree on that, and I also see that we are, even though there's deal flow right now, there's still a lack of quality deal flow. So I think that as the quality of the deal flow keeps growing, we will, and even since we are like the first funds to really bet on this growth, I think I don't think lack of capital will ever be a problem. We live in a country where there's a lot of money, right? So and as long as I mean that's our challenge as pioneers in this industry. As long as we keep showing results, maybe it will take long. I don't know. I mean, we might get some exits, we might get some returns really fast, we might not. But I really think that when we start to show some results, and that's our biggest challenge, and if it was easy, I am 27 years old. Maybe I wouldn't have the chance. If there was no challenge here, maybe I wouldn't have the chance to do it, right? So I only think that as it continues to grow and as we continue to give back results to our LPs, some other investors will actually come and really invest here. But it's our challenge, and it's the risk we have to take, and we have to be all in on that.
Well, building on what you guys said, I think that although there is capital, there is pipeline, I think there is a disconnection sometimes between scientists. By the way, there is a very good innovation produced in Mexico or done in Mexico. However, there is a disconnection between the scientists or technologists and the market. So there is definitely a gap there. The solution that is being implemented, or the recommendation, is to create offices of technology transfer in order to close that gap. That's the first thing. The second thing is that legal vehicles. 90% of the funds in Mexico, I'm talking about the whole industry of private equity, are incorporated abroad. There is not a legal, a regulatory framework that invites to the creation of funds in Mexico. I think that especially for those small funds, seed capital, that don't have the scale to afford Canadian fees, I think it would be very important to create these structures in Mexico. In Mexico, we have two structures. The first one is Sociedad Anónima Promotora de Inversión, or SAPI, which is like a limited liability corporation. However, this structure doesn't have legal transparency or doesn't offer legal transparency. And on the other hand, we have a fideicomiso, or a trust, or a FICAP. And although this offers legal transparency, it implies fiscal transparency, sorry, or tax transparency. The fees could be high, especially for those small funds.
I'd like to add, I mean, that was a problem when I tried to start our fund. Now there is a chance. Actually, our fund is not incorporated abroad. We actually use a trust as a vehicle based on a tax regulation, la miscelánea fiscal, which actually it's no longer a FICAP, and it gives you the tax transparency. So it's really easy. I mean, it takes some time, but it's really easy now to incorporate a smaller fund. Ours is 5 million, and it's not a FICAP at all. We have a tax transparency as long as 90% of our income comes from exits and investment returns. So that's really interesting. That's a vehicle that people aiming to incorporate a fund should look at, because for us it saved our life, because we don't want to go through all the Canadian LP process and everything. So there is a vehicle. And on your first point, I would, following that line, I would really add that the disconnection between scientists and maybe us, I think the key player that is missing so far is universities. Because if you analyze where the money comes from for VCs in the States, a huge percentage of the money coming into VCs comes from university funds. So I don't know about you guys, but I don't know how many universities, Mexican universities, are investing in you. At least in my fund, I have no university fund investing in me. So, and I think I really think we have to work on that. Not only I think universities have to work with the students to make high quality entrepreneurs, not just creating good employees. I think that's one thing. But the other thing is also, we have to work on universities betting on VC funds, because that's where that connection might come, right? Where scientists or students, science students can come and just access to venture capital their universities invested in. So I think that's a key player that's missing in our ecosystem.
Yeah, one observation, obviously we go to Stanford a lot and try to find meaningful new PhD projects that could be commercialized. And what we've found is that there's barriers in both directions, right? So the one barrier is that PhD students have a hard time finding people that can help them take their ideas to the world. But interestingly, a lot of VCs don't know how to speak PhD, right? And so, this is one of the areas where having Anne as a partner has been really valuable, because since she has her PhD from Stanford, she can go onto the campus and talk to PhDs and understand what their work really involves. Whereas if I went to Stanford and did that, I'd just be like, what's your target market and your segments and all that stuff. And
it's a different language.
That's not what it takes to animate that kind of technology out of the lab. And so I think it'll be interesting to see if sort of the Mexico and Latin American ecosystems evolve to start to have people with deep technical backgrounds, and not just bits and bytes, but people who are like scientists and PhDs also kind of crossing over into the venture business and the investing business, because I think that's where a lot of the translations, Vinod Khosla is that way as well.
We need to create some success stories, and people will follow. Right now, the challenge is that at least I know of one university, private university, that is participating in a new fund of funds that is being managed by Northgate Capital, and they are investing alongside a lot of the Afores. And touching on this, well, there's a misalignment. Most of our scientists that are registered with our National Science Foundation, that is called CONACYT here, they're being paid to publish, and they don't ever cross their mind to patent, not even in Mexico.
Or they're borderline hostile.
Yeah. Well, so they're not interested, and I agree that they need to be nurtured, and they need to be. You have to take them out of the labs and get them together with entrepreneurs and angel investors. They need to understand a little bit more. Both of the three groups need to understand each other better. But when you have a success story, and some of our seed bucket is being aimed at that. We're investing into very early, but very big ideas at the UNAM, at the Monterey Tech, at different universities. Because if we have an impact and a success story in one of those alignments, mechanisms of alignment will start to change. And there is, because we have more flexibility on regulation, for example, on some sectors, there are many opportunities to really bring some of these research projects, or not in the innovations, I would say, into the market faster than and at a much lower cost than it will be in the U.S. For example, just in the health space.
So I think that the opportunity here in Mexico is not necessarily in high tech, and I'm not seeing universities make like very substantial research that could be patentable and that we would be interested in. And actually, that's not our investment thesis. But I think venture money does not have to do with high tech; has to do with working with companies under conditions of extreme uncertainty. And uncertainty can come in very different flavors. So one is not knowing whether a technology will work, but another in a market. But another one is taking a existing technology, but still not knowing whether the market is going to adopt it. And I think that's where emerging markets are right now. We know that the solutions are out there. We can come up with creative ways to bring solutions to very complex problems. But we do not necessarily know if the companies are going to be able to get to scale in terms of distribution and in terms of sales. And that's where we can operate, and that's where we can add a lot of value. So I would focus more on funds that have expertise taking technologies to the market than funds that have expertise talking to PhDs. And that's just particular to these emerging markets, totally different from Silicon Valley.
There is this government program that someone talked about, failure, that promotes failure. This government program was implemented 2 years back as a pilot. And basically, it's a guarantee program for high-risk enterprises. This program is called Opción Pyme and guarantees up to 70% of investment, capped at around 400,000. And it has worked pretty well. We hope that the next government administration implements it, but this has worked and really provides an incentive to investors to invest in high-tech companies that are risky.
Now, I'm trying to be sensitive and cognizant of the fact that we're the only thing that stands between people and this beer party that's coming up. So I want to make sure that I'm being mindful of how much time we have left and if we should start to take some questions from the audience. Sure. Okay. Well, I guess one of the themes I think we've heard is that have to prove success, right? It's time to show some good success models and some wins. But apart from that, apart from let's show some success, what other things do you think can be done to just encourage and accelerate more investment into venture firms, new and existing, that will help more companies get started and flourish?
I think that we need more competition. We need to open more funds, and the best mechanism to develop or accelerate and align an ecosystem, because the ecosystem is there and it's very different in the different cities, very different from what Silicon Valley is. But what we need is our guys that sell their companies and they decide to start a fund, really, because that generates potentially. I've seen and I've studied the cases of other companies, other entrepreneurs that have sold companies in Latin America, and you can see hundreds of companies being created of the original teams behind that initial entrepreneurship or that initial transaction, and I agree that if we have more funds in here, we would be more taking bigger risks. Right now, the ones that were in the market, I mean, I don't have a problem with deal flow. I'm overwhelmed. I have close to more than 400 deals to look at a year. I have like 1.5 deals a day. And we get deals from companies from the U.S. that want to access Latin America with the right partnership and networks. or deals in South America or Central America and Spain and everywhere, Israel, that want to access these markets. But what, in my personal view, will have a bigger impact is that we invest, we fund more companies, and we test more of them in the market. And to be able to do that, we need to take down the part of the co-investment risk, and we need to be more risk seekers in investing. And as you were saying, here is not only technology and very high risk initiatives. We are investing into, as I said, innovation in companies that are growing 400% a year on sales. And the most interesting aspect of this is that my partner didn't believe this, but he's from the U.S. He has experience in BC in the Rocky Mountain region. And I said, no, here we value companies based on EBITDA. And he said, when you have EBITDA in the U.S., you sell the company. I said, no, here we have profitable companies. That's how we operate. We don't give ourselves the chance to be 5 years running on negative with a burn, no? And here we are investing into companies that in the first year, they're I would not say numbers here, but initially you're pretty much multiplying by 5 or by 10 the value of your investment on the first year of operation, because they're already profitable.
Wow, maybe we should spend more time in Mexico.
I bet you will.
Well, I would say that there are 4 things that I would suggest. First, universities need to jump into the game. I was just in Colombia a month back, and then there is this Universidad Javeriana who has an endowment that was considering investment in their own high-tech projects, just as what you said, Rogelio, with the Mexican University. The second thing is we need to create more institutions of trust, such as MITA, such as Connect, such as angel groups. The 4th point is that we need to create exits. The corporate sector needs to jump in, needs to consider small companies which serve as sources of innovation and do M&A. We have had some success stories through this model in Mexico. And of course, there also need to be exits to the market. The Mexican government recently launched a program called Small Companies to the Market, to the Bolsa, or to the stock. And it has worked out very well. I think that's a good option for some mid-sized companies that want to go public.
From my perspective, at the entrepreneur level, I think entrepreneurs need to keep organizing themselves, learn from each other. I'm not very confident on the role of universities in the future. I think people will educate themselves, and they have to get sophisticated. They have to create communities, etc., create mentorship networks. At the VC level, I think that we need to work a lot on strengthening and diversifying liquidity paths. We have to make sure that we're communicating the right message to potential acquirers, both domestic and international, but also start working at a higher level, thinking like 10 years ahead, whether or not we can reactivate the stock market, and things like that. Like, otherwise, we'll be here for 5 years and then we'll be out of business. And I think there's a large role on the LP side. People that have running family offices, people that are individual investors, high nets, need to be looking at this opportunity seriously. I feel like there's, I don't even think that it's riskier than other investments. It's just different. It just has different dynamics. It has less liquidity in the short term, but it has higher returns. And we have to have very honest discussions with each other about what people can expect from putting money into a venture fund. And if we kind of do that, I think we will be fine. But we really have to start working on the long term.
I basically agree with everything you just said. And I mean, work hard, keep working hard, taking risks. On our side, it has been taking risks with our own money sometimes, and hope that luck is on our side, and that the market, because to get success, to achieve success, and to get exits, you need market adoption, because you cannot sell garbage, right? In the end, so creating value and expecting that the market develops, and work really hard.
Okay. Any questions from the audience?
Hello. Actually, I'm going to exercise organizer privileges and ask a question myself. And then I'll be happy to pass it to you. But this whole conversation is just revolved around money. And I just have a question for the panel, and including you too, Mike. How hands-on involved are you with the companies that you fund? I'm just curious to see if there's much of a difference in Mexico and...
So, just to answer that and to picture how involved we can get to be, the first company we invested in, which was an online food processing company, we basically were helping taking phone answers and helping the orders being processed. So we are really hands-on. We try to be on the board and try to make strategic decisions with them. I mean, for me, that's the really the thing that passionates me the most, like being involved with the projects. Because just putting money in companies and just waiting for them to grow and get an exit, I wouldn't be doing it if it was just that.
Yeah, that's a fun part. Actually, I would like to spend more time with my entrepreneurs and less time talking business. We are very hands-on. We take the companies when they are really early, so we have the chance to get really involved with developing the whole thing, the team, the product, the market. I like to think that sometimes we even come up with good ideas that they can turn into reality. We've cried with them. Like there's so much emotional burden into building a new company that we sometimes are the friends there that understand what they're going through and are there when they're going through the rough patches. So we see them on a weekly basis, especially for the first 6 months. Then when they're later in a later stage and they had investment from a new fund, we talk to them at least every month. We get emails from them all the time. We try to answer them. They're like the priority. So they are the only ones that do not get flagged as like follow up later. They are immediately responded because we think that that's what makes us different. That's what VC is all about. It's about helping build companies. That's why we do this. Otherwise, we would be, I don't know, investment bankers.
Yeah.
No, it's there's a lot of hand holding, and the first thing we do, obviously, well, someone touched on this before, but we're early stage is about partnering with the entrepreneur, and before we make the decision of investing with him and his team, we travel and we get to know him very well. Maybe sometimes better than what he knows about himself, and to some point. And the first thing we do is most of the startups or entrepreneurs, they're very bad at managing the administration of the company. So we immediately bring on a team that helps infuse transparency and trust into the company by managing correctly the expenses, all of the boring stuff where really the entrepreneurs don't add a lot of value. So that's the first thing. The second thing is that we start bringing on specific teams of talented teams that are experts in helping the entrepreneur implement specific tools to help him align his team to be ready for scale, to help him, like the Rockefeller habits of Bern Harnish, like we have what we call the FinCode. It's really the financial DNA of a company to understand, based on the business model, if you're building or creating value or you're not creating value. And we systematize that in a way so that the information that is being generated from the operation is being used for decision making through the month as it progresses. And us as board members, we see that same information. And we know exactly what's working and what's not working, where are the nuts and bolts that we need to go and fix or apretar, no? Like tight them up. And really how I see myself, because I participate in all of the boards of these companies, and it's difficult sometimes, it's about, if you're paving a road, it's like preparing the next mile so that this guy keeps accelerating. And if he needs to license his company, his technology to a big corporation, I sit him with the owners of the top 3 players in the market in Latin America. And he will never, by himself, he will never have that type of access. The reason why we're very successful at getting them very fast and with an exponential growth is because our co-investors, that are all of our families, we have access to their distribution and commercialization infrastructure and all of their relational capital. That is huge. We can pretty much see ourselves and our entrepreneurs in front of anyone at all levels in the private, public sector in Mexico or abroad. So yes, we get involved.
So in our case, as angel network operators, we rely a lot on the angel. In most of the investments that we have closed, the angel has significant expertise in the industry he or she is investing, so they do the job for us. But we also have a shared services unit to support entrepreneurs with administrative tasks such as accounting, reporting. We also assist them with corporate governance. We really try to have an arrangement or a deal that really aligns the interests of the investor and their entrepreneur. For example, the entrepreneur comes with us or comes to the angel investors with a very high valuation. So we say, you know what, you are gonna, instead of getting 90% of the deal, you're getting 10%, and if you reach your milestones or your objectives, you will have the right to get more shares. So the incentives are aligned. On the one hand, you have the investors that knows that the entrepreneur is going to do the right thing in order to get his shares back. On the other hand, you have the entrepreneur stating real objectives or objectives that can be met. So that's how we do it.
For us, there's so many things. You know, the top thing I think that people in the venture business struggle with, regardless of what market they're in or what stage, is how should I really add value? And it's a fairly subtle question, because if you have to do too much to help the company, you may have backed the wrong company. And in the end, you know, you really are an investor. But I'd say that the thing that's been the most satisfying for me has been when a company was on the verge of death. You know, when, you know, startups go through near-death experiences all the time. And there have been some where, you know, like this textbook rental site called Chegg that we're an investor. we were doing Craigslist for colleges. Facebook decides to get into classifieds. We have 30 days left of cash. Are we going to put in that one last bit of extra dollars to run the textbook rental experiment, right? It's just like it's do or die. And so I'd say that, you know, like Tom's here from Rally, he might tell this story sometime about how close to the edge we got before we raised that angel list round. And so I think the most satisfying parts for me have been when we had a chance to walk away or double down, and we doubled down, and it was the right thing to do, and then the company just kicked ass after that. You know, that's probably the most satisfying part of the business for me.
Crisis is focus. Help
yeah,
focus
sometimes you've got to stop a bad business. It's just a fact. But it's when you chose not to, when you chose to double down one last time and go all in, and then bam, it takes off. Those are the good ones.
I'm sure we have more questions because we've had the most active Twitter stream of the day with this VC panel. And so who else has a question?
Thank you. This is a great panel, but I don't believe what just said, you know, because we engaged in many, you know, a creation of many angel network in America. And think about it. I mean, in the United States, there are 250,000 angels, for example. Right? So financing $20 billion. So the problem we had in Latin American countries, actually, well, angels also have to get out. Well, buyers have to be VC, but doesn't exist. And the VC that has to also get out and exit, but private equity doesn't exist either. And you know, private equity wants to go to the capital market. Capital market is not efficient yet. So I'm just trying to understand the relation, what you have seen so far. Let's say how to, you know, how the angels actually, you know, getting out of the deal, I mean, exiting, and who is buying the shares, and the VC actually, who is going to, they are going to exit. I mean, because of the absolute number of the VC and the angels so small, and I don't think I have seen any successful story of this sequencing financing.
Sure. Well, as for us, we have closed 9 investments. We had 1 exit, but it was a non-traditional exit. The options that we are considering is rebuying from the entrepreneurs. The second one would be M&A, and the third one would be, hopefully, the alternative market at the stock exchange.
We had, of our 6 investments of last year, one of them that we seeded ourselves, and then we were in the middle of the Series A round, and then the company was acquired by Motorola Solutions. I think that most of our investments here, we have been the first money in. A lot of them are bootstrapped companies, and even at the Series A. But that's why part of our strategy has been to be kind of multi-stage, you know, and believe it or not, of our 12 companies, at least for 3 of them, I have of our co-investor pool, a very clear interest from our co-investor to acquire it. And these are families that they will never start the company themselves, but if we get that company to $30–50 million in sales, they can integrate it easily with their consortium of companies. No? And that's the best way for us to we're not relying on the capital markets, and the number of IPOs everywhere in the world has shrank a lot. And so here we have to be more creative and build our own exits, engineered exits with our own investors. That's how we're working it. And the industry is going through a massive correction. I was reading the other day that in 2006-07, the number of 2004-2005, the number of funds that were doing at least one investment in the U.S. was close to 1,300. Right now, it's close to 300. So that's a correction. And right now, we have the benefit of starting with, I think, a different model of a traditional VC fund as you know them in the US. We're operating a little bit different.
Yeah, I mean, I totally agree. I mean, the legal ways to exit, M&As, stock exchange, go on sale, you know, there are many options. It's just, and I love the engineering exits. It's why I think that's the main value we create for investors, right? That we actually are creative and we engineer exits. And that's part of our value that we put in the company. That's why I think business angels that are not experimented or that don't have a deep expertise in investing, that's why they should rely at least on participating with a VC fund that actually has some track record doing that. We had the luck to have one exit on one of our portfolio companies, and we had to look for the opportunity, and we engineered it since the beginning, right? Business angels have to just trust and try to partner with people that know how to do that.
Any other questions? Oh, sorry. There we
go. Two quick questions. The first one is, when a company is a national company and this company trying to go global company, the first question is, are you willing to help the company? And the second one is, what is the return on investment are you expecting from a company like that?
So I have a bit of experience on that because we were part of an expansion of a company. We're totally willing to help. I mean, why wouldn't we, right? It's just analyzing whether it is the right thing to do for the company, because sometimes expanding or going out of a market you don't know, or just being over ambitious might kill you, right? So, of course, we're willing to help. It's just a decision that you take, taking into account all the factors.
So from my perspective, it has to do with how much risk there is into going to a different market and how much upside. If there's a lot of risk and also a lot of upside, then probably venture money is the right way. If there's not, I'm sure that there are other financing options that might fit better that case.
That's why you buy companies abroad, right? Because they are all, rather than go and do business on your own, you better go and acquire the one player that's doing it great.
And I guess it also depends on the industry. I'm sure there are some business models that could easily work in other markets, such as internet. Projects in Mexico could easily work in Colombia or Latin American markets, so I guess it would depend on the project.
Oh, and then you asked about return multiples, I think. In our case, in our very early deals, we're expecting 50x returns on a company basis. On a portfolio basis, it's more diversified, and of course, it's much less.
For us, a requirement is that the company has to build a value proposition for a global pain. If it's only a Mexico pain or regional pain, we don't invest behind them. So all of them are global. They have a global vision and global potential to make them big. The market, I mean, we have $1 trillion economy, but if the sales projection of the company are $15 million in 5 years, that's not interesting for us. It has to be higher.